So really wanted to first welcome Charles.
Again.
So really a pleasure to welcome Charles. Welcome back again, and it's really a pleasure. And I think we're going to have an amazing discussion. I think a very complementary one about DeFi and how that fits into the tokenization of real assets, and especially with your experience. So welcome to the fireside chat, and thank you for being our guest.
Thanks for having me.
Thanks a lot. And maybe to start off strong, you are one of the most long-lasting DeFi protocols with the longest track record.
Cockroach.
We discussed this before. I wanted to say the most resilient, but Charles is going strong. So, I mean, you went through the early days of DeFi, and I kind of sort of reflect over this last couple of years. You know, you start in your industry. You know, you go through the 2018-19. You know, this ICO craze kind of stopped. And then, as you think that everything is going well, then is this person called Anton. Then he launches his own protocol and stablecoin, and then that implodes. And there's another person called Sam Bankman-Fried. That implodes, you know, and you're still there, still going, and still thriving. So, can you tell us a little bit if there was any particular moment in your career in building dYdX that really defined and shaped the culture of dYdX as one of the most resilient companies in our industry or ecosystem?
So indeed, our industry is extremely volatile, and it's basically a roller coaster. So it's tough. I'm not going to lie. It's not every day a happy day. Some days you're just exhausted because there is so much energy you need to put on the project. Some days you're disappointed by some of your peers, thinking like, what is this guy doing? Like, he's kind of tainted a lot of us in the room because there is one bad apple into the basket. And then you get some sleep, you recharge, and it's just another day. That's okay. It's a long-term thing anyways, and it's some kind of life mission, right? Eventually, I keep believing in DeFi because if you look at all the different crises, it's very seldomly the infrastructure which is failing. Most of the time, it's the humans. And if you look in TradFi, it's the same. Bitcoin was born out of the global financial crisis, and it was not Swift breaking up. Yeah. It was not any software bug. It was basically the greed of TradFi bankers building like toxic products, and eventually it became too big. We have the same kind of trend sometime in DeFi, but eventually where I'm going is that the infrastructure, the software is for the most part healthy. And within this process of growth of our industry, the human factor sometimes disappoints you. So you want to make sure that within the organization, within the team you're building, you keep this very high integrity. And you learn to say no many, many times. You learn to say, let's do one thing well rather than trying to do everything which is coming our way. And it's not easy. Sometimes as a leader, you've got like many people coming and trying to convince you, hey, we should be doing this, and this is hard, and whatever. But then you realize there is no bandwidth. If we do that, it's going to be too quickly done, and probably it's going to burn our fingers. So I never doubt in DeFi. I've been disappointed sometimes by humans, but the infrastructure is there, and we see it nowadays. I mean, if you take the bird eye, like who is not involved in crypto or blockchain nowadays? Like every single one, from the governments to the regulators to the top mega bank, everyone is involved, and it's just the momentum will keep growing. But it's a long journey, 10 years, so it's not. It's a roller coaster for sure.
Yeah. And maybe just to ask you very close related to that. I mean, I just read the other day that April of this year, if you look at the hacks that happened in some specific protocols in DeFi, I mean, it was one of the most burdensome, let's say it like that. So how is your perspective about recovering from such events? You know, Kelp DAO, I think I'm referring to that, and now we even have some industry-wide initiatives how to cover the gap that resulted of it. So how do you see this dynamic in a trustless environment, people trying to come together and resolve a problem? I don't want to say a DeFi bailout, but trying to resolve a problem. How do you see that? This is something very positive, yeah?
I think it's positive, but we should also make sure we don't cover up with good efforts a big mistake, right? I'm not into all the details of those hacks. There is so many of them happening, but basically it's always a mistake, and for the most part it's a human mistake. We have bugs here and there. I'm not saying there is no bugs in DeFi, but again, it's either greed or it's someone saying, hey, I'm going to basically diversify, so I don't understand what I'm doing, so let's diversify. Right? So if I make a mistake, it's going to burn me only so much. And then the mistake happened to be much bigger. So yeah, just trying to stick to simple things. I was doing a review with a team recently, and we were looking at all the multi-sig, because there is so many hacks recently. And as I come back to this point, like the humans involved in projects are, for the most part, the weakest point. They can be social engineers by hackers. There is so many different kind of stories. So we were doing a review and making sure that the multi-sig is essentially put in place in a very efficient way. And what we settled on, which was already in place, but we just kind of, as an hygiene routine, go and look again, and look again, and look again many times a year. And essentially the multi-sig was extremely simple. Like the multi-sig technology, so when you build wallets for project, you can have different systems to essentially grant access and grant validations for transactions in different roles and stuff. And we ended up having something extremely simple. A little bit cumbersome, but simple, and making sure that the human will not damage too much the software. Because if you do software properly, it works. Yeah.
Yeah, it's really great to hear that you're doing such audits and that you're validating that everything works. It really gives a lot of confidence to everyone in the industry.
It's not the code audit, it's a human audit.
Yeah.
And more or less every 6 months. It's just a routine. Yeah.
Great to hear. And I want to touch upon a topic that you mentioned during your panel with Dr. Demetrius. You had this interesting point about, at one point in the future, how this bridge between traditional finance, products in traditional finance and DeFi will happen. It was very interesting for me to hear from you that you see this actually happening in the foreseeable future. So there is a hybrid approach. This is something that you might have access to products in DeFi. So how do you see this integration happening? Because you always think about traditional finance, this legacy, burdensome, very bad kind of, right? And then we think like, oh, we are innovative and cool. How do you see this merger happening, and where could be the friction and the opportunities actually?
I try to look at this and reverse engineer a little bit. So I want to start from the user. So you've got different type of user. You've got the early adopters. I'll take the assumptions you are an early adopter of many things in life, and in crypto, when something new comes, you're the first one. And then you've got a second wave of users for whatever products you launch, which are like the later adopters, so to say. And these people are humans. We come back to the same theme again and again. And humans will not change so fast. So if you look at how TradFi distribution has been evolving over the years, if you're a customer of HSBC or a customer from FAB or anywhere you like, usually they start with one single product. It's a saving account. And then they launch another part of the bank, which is a mortgage. And then they do a partnership with an insurance company. And the fast forward, essentially, this bank relationship you have the banks become an aggregator of many different services. And I don't see why this pattern of distribution will change in crypto. I do not think it's going to change, because the people will not change. I'm busy with my life. I don't want to be running between different services. I'm lazy as well. And I believe in brands, and I need to anchor my trust somewhere. So it's easier for me to anchor my trust with HSBC or with someone else. So I think the distribution of DeFi will be essentially enabled much faster than what people think, but by TradFi, by companies which have already this relationship and which will aggregate and makes the journey for people way easier. So I look at this from very much a reverse engineering point of view. And we have to admit as well that the crypto companies in general and crypto projects have not been doing a great job at acquiring customers. And I'm not blaming them. For Web 1 and Web 2, acquiring customers is super hard. You might throw money at it and it's still not working. Some people have hundreds of millions of funding and they try to acquire customers, and the people take the rewards and they go away. It's just hard. So anyone who have already an existing base of users and can upsell them with something, it's called distribution, will be a big winner. That's why I think you're going to find the CBDCs, the stable coins, the RWAs being distributed in a smart way. So I think crypto projects should be humble and thinking distribution first.
Okay. That makes a lot of sense. And do you see any particular protocol that could be partnering up with brokers or banks? For instance, would it be Uniswap or Aave? Where do you see, like, from your, or dYdX maybe, which do you think could actually be the first simplest product to be distributed to our partners?
It's happening everywhere already. The leading use case is usually lending. So people have money sitting somewhere, they've got stablecoin, and the fintech will tell them, hey, I don't have a lending license, but under certain terms and conditions, you can go on Aave or Morpho. You see that in multiple use cases. I think the latest use case from with Aave was they partnered with a creator platform where they get paid every time people view their videos, and essentially they get paid in stables, and they can basically have a saving account within a multimedia company. So that's where you see finance going everywhere. You can think maybe in a few months, maybe the Talabat driver will be paid in stables, and they will have a saving account from Talabat. Why not? And all of this can be essentially put in place at very low cost, low friction because of DeFi, without going through like a full banking infrastructure and backend and so on.
And when we were talking about real-world assets, we had in the initial discussions that you have to go through this full life cycle that you're referring to of actually acquiring the asset, then securitizing it, customizing it, having the legal framework, and then working towards distributing, right? And can you share your thoughts, like how does that converge and how is it compatible with DeFi, right? Because you mentioned in your panel a very important point that if you look at globally, like the regulation or the framework for DeFi is not really present in many jurisdictions, right? So how do you see this combination of like something that's very regulation heavy, like real-world assets, and DeFi, which is very elegant, very smooth, very, very efficient? How do we combine these two worlds and make a great product for the end users?
I think it's going to happen in different shape in different parts of the world, but one path will be to give more digital asset natively on digital infrastructure first. This is going to basically avoid all the painful process of taking a TradFi asset and tokenizing it and so on. I think that's the fastest way, and probably the first leg is to bring money and monies, like whatever currencies, into stablecoin, and then you start to have like the first foundations of the full financial stack happening. And as I was mentioning earlier today also, I think every time you can sell capital efficiency to people, this speaks to the most important people in the room when you tell them your money can be working 2 days more. Your money can be working 6 hours more. It's just, as soon as you move a lot of money, this makes a very big difference. And that's a value proposition you can offer when you are in DeFi or at least in kind of crypto-native infrastructure, which is very hard to implement within TradFi.
And can you tell us within your client base at dYdX, what do people prefer? Do they prefer stablecoins? Is it USDC? Is it USDT? Do they prefer actually to have maybe tokenized treasuries as a collateral where they trade? How do you see this among your professional, serious traders? What do they use as a collateral when they trade them? Or as a
collateral is USDT, USDC. They are the biggest ones. What people trade most is the crypto top 5, so Bitcoin, Ethereum, Solana. You see a very big jump into gold, into essentially RWA, so gold perps, WTI perps. This is a market where you start to see the derivative market. So dYdX is a derivative platform, essentially, where people start to essentially look at tokenized equities or tokenized commodities and starting to look at them, how to long them or to short them. So it's very much more granular type of expressions, of market expressions, yeah.
Maybe people are interested in how do you manage weekend trading for oil and gold? Because traditional finance, where you have most of the volume, they don't trade on weekend. I mean, imagine that.
Yeah.
Right? So how do you deal with that? Where's an opportunity there? How do you do it?
So usually the market forces bring some market makers, which will be essentially quoting. So let's say you want to trade Apple stocks. So Apple stocks can be traded from Monday to Friday in the US period. You want to trade it on Saturday. Essentially, market makers will come and price this market, and usually the spread will expand. So you will get access off hours, but you will not get exactly the same type of pricing. If you trade within Monday night here in the UAE, so the market is open in the US, like you've got the tighter spreads. if you trade on Sunday evening, the spreads will essentially, someone will need to price this risk of a price difference when the market reopens. And they will look also at the derivative market pricing over the weekend to kind of caliber the risk and caliber the pricing they want to effectively quote during the weekend. So it's a young equilibrium, but it's an equilibrium which is driven by the market, and it's interesting. It gets traction, definitely.
And I was just sharing this anecdote with you, Charles, before the panel. I have a colleague of mine who worked before the traditional family office, and he called me, a few weeks ago, and it was turbulent, and he said, "I'm trading oil," and it was Saturday evening, and I said, "But where?" And then he said, "Hey, there is this platform." I think he mentioned some of those in US, and he said, "I'm trading gold in DeFi." And it's, I think, if you just, I'm illustrating, there is an amazing use case. But as you say, it comes with its own challenges, wider spreads a little bit. But if a person who has a professional aspect wants to trade it, I think it's highly valuable.
Yeah,
so just really to compliment you on that. Yeah. And okay, we have a bit of time. I wanted to ask you two more questions. So first one. You are one of the most accomplished and international person that I know.
Relax.
So really strong. And we always praise UAE. I mean, some other jurisdictions as well. But from your very extensive background and experience, where do you see which jurisdictions, which country, geography you see as leading for this combination between DeFi, real world assets, maybe a bit of TradFi? Who you see is at the forefront, and don't be shy to praise UAE.
There is more money in the US, but I don't think DeFi will strive as fast as other parts of the world. I think DeFi regulations in the UAE are probably more advanced, and they just really want to grab, and they are more competitive as regulators and as a nation than other parts of the world, which gives them definitely an edge. And then you've got the big bucket of money in Asia also. So Singapore is cooling down for all kind of reasons. So it might be still top of mind for some people, but I think it is not as top of mind as it used to be. Hong Kong is slowly moving, but it's a very, very large bucket of capital, right? It's the Hong Kong markets and the mainland China market next to it. So it depends where you want to compete. Do you want to compete in the number of licenses, the pace of new regulation, or if your KPI is basically volumes and market dominance within those KPIs. But the US is definitely in advance. I think it's going to basically push us. Today we are at $360 billion of stable coins. By the end of this year, easy 600, 700 billions for sure. This will be pushed by the US, middle of August or so, if everything goes according to their plan. And this stablecoin will basically bring more tokenizations of different assets. But again, the competition it really depends what do you compete for? Yeah. Volumes, number of assets. If you look at RWAs, $26 billion of RWAs today in the market, more or less. Mostly gold and T-bills, not so much tokenized equities for now. This might change later on, but I don't think the value proposition of tokenized equity as they are today is super strong. Many people have already access to equity market, and giving them a digital Apple stock is not always making sense, unless you wrap it with a derivative wrapper and start to go long and short and so on.
Okay. And the last question. When we're talking about actual usage of applications in DeFi, wanted to ask you, what is your favorite application protocol in DeFi? Where do you keep your funds? I know you guys from dYdX are highly successful.
Let me give you my password, everyone.
You keep everything in dYdX, or what do you use?
I obviously use dYdX quite a bit because this is what we spend most of our time on. At the dYdX Foundation, we use Morpho and Aave. So we have some positions. Part of the treasury of the foundation is in stables, and we put these stables to work. So we are very picky on which vault where we go. I'm not going to do the investment advice, but we go for the less risky within the riskier. And we also allocate to tokenized treasury bills. Also RWAs, yeah. So we do some DeFi lending, we do some real world assets, and we have some position in TradFi as well.
Awesome.
Yeah.
Thank you very much, Charles.
Thank you.
This is amazing. Please give a round of applause for Charles. And if you want to talk to the most knowledgeable person about DeFi, here he is. Yeah?